Advanced Micro Devices ticker AMD is currently trading at $97.84 and is up by almost 30% since the last month. We can see that in 2019, before the pandemic, the stock was trading at only about $30 a share, but then in the matter of 2 years jumped up to $155 a share. Now in this video we'll have a look at AMD and see if this insane stock price jump is rational or if this stock is just experiencing a market hype and will fall back down to its original value in the next few years. To do this, we'll jump over to my stock analysis tool where we'll have a look at an 8-pillar analysis and find the intrinsic value of AMD using the Grams formula revised, discounted cash flow model analysis, and the multiples valuation model. Now, if we have a look back here, we can see that AMD is currently not paying out any dividends, and the analysts project the price of $93.78 for the end of 2023, which is about $4 lower than the current trading price. If we have a look right here, we can see that the total revenue and gross profit of AMD have increased by almost 40% each since 2022, unlike net income, which has decreased by almost 60%. Now we can see here that the free cash flow has decreased by about 30% as well. The beta of AMD is currently at about 1.9, which suggests that the stock is fairly volatile, and as we can see up here in our graph, that is indeed the case, as the stock jumped from about $120 per share to about $50 a share in a matter of 6 months. Now let's have a look at our 8-pillar analysis. First, we want the 5-year P ratio to be below 22.5, which is certainly not the case for AMD. Next, we want the 5-year profit margin to be above 10, and AMD barely passes this pillar with a 5-year profit margin of 11.27%. Next, we want there to be revenue and net income growth over the last 5 years, and as we can see here to the right, these two have been increasing flawlessly. Next, we want there to be a decrease in shares outstanding, and as we can see here, AMD has increased their shares outstanding by about 27%. Now this is not a bad thing, as AMD is currently trading at a really high price compared to its historical value, and by selling out more shares at this current value, the company is drastically increasing their cash flow. Now next we want the long-term liabilities or the 5-year free cash flow to be lower than 5, and AMD passes this point flawlessly with a ratio of about 0.34. Now, we want there to be an increase in free cash flow over the last 5 years, which has been happening as well. And finally, we want the price to free cash flow over the last 5 years to be below 20, which similarly to the PE ratio has not been the case. Now let's move to finding the intrinsic value of AMD. First, we'll apply the Grams formula revised, where we plugged in the earnings per share and calculated an intrinsic value of $8.76, which is much lower than the price which AMD is currently trading at. Now, we have to take in mind that the Grams formula is mainly based on the earnings per share of a company. Now, it doesn't mean that when a company has low earnings per share, that isn't necessarily a bad company. That's why on this channel we use 4 different valuation methods to calculate the ultimate intrinsic value of a company. Now, let's move to the discounted cash flow analysis model. Here I plugged in the free cash flow over the last 10 years and calculated the average growth rate to be at about 33%, and then calculated the average growth rate percentage for the next 10 years to be about 7%. I used this percentage to predict the future free cash flow over the next 10 years, and then used the discount rate to calculate the present value of that future free cash flow. I summed up all the present values of future free cash flows, added any cash and cash equivalents, subtracted total debt, and got an equity value of $47 billion. I divided that by the shares outstanding and got an intrinsic value of about $30. The reason for our intrinsic value being so much lower than the current price of the stock is the fact that AMD has a really high discount rate percentage. Now, if I was to change the discount rate to the average discount rate, which sits about 7.5%, we can see that I would get an intrinsic value of $53.76. Now let's jump to our third valuation, which is the multiples valuation. Here I compare AMD to Nvidia, Texas Instruments, and Broadcom. I took these companies' current stock prices divided by their current earnings per share and got their PE values, which I then averaged out and multiplied by the very low earnings per share of AMD to get an intrinsic value of $23.79. Now we're going to skip our dividend discount model as AMD doesn't currently pay any dividends, and we're going to arrive at our final valuation where we average out the Grams valuation, multiples valuation, and discounted cash flow valuation to get an ultimate intrinsic value of $19.90, which is 80% different to the current trading price. Before we finish, let's quickly jump to my Interactive Brokers account, where we can see that the analysts project a growth of earnings per share for the next few years, and in 2027 the earnings per share should be at about $6.33. Now if you scroll further down, we can see that they also predict a growth in cash flow per share, and all the way down we can see that they do predict a really good growth in revenue and also growth in net debt, which is expected. Now, I personally do believe that AMD should be trading at a higher price than the intrinsic value we have calculated, purely because of it being one of the biggest suppliers of chip and micro devices to the world. I currently do not own any shares of AMD, but I'm prepared to start buying them when they fall below $40 a share. Now, if you enjoyed this video, make sure to leave me a like and let me know down in the comments if you own AMD or if you plan on buying it in the near future. If you want to see more analysis like this, make sure to subscribe as I upload 2 to 3 times a week.